Welcome back to Ferocious Education, this is Ed. Today, we're going to be talking once more about Clover Health. In this video, we're going to dive a little bit towards the updates for this company and approach it from more of a growth perspective rather than just trying to basically understand where they've been. If you'd like to know about their history in the last year and how things are looking fundamentally, watch my last video, but today we're going to try to look a bit with an optimistic view. So without further ado, let's jump right into this one. So in terms of their press releases, on January 10th, 2022, Clover Health beats expectation with Medicare Advantage memberships growing by over 25% at the start of 2022. This is fueled by strong performance in New Jersey and Georgia. Now, a technology company is what they refer to themselves as, instead of more of a company in the health sector. And they basically mentioned that as the beginning of 2022 has seen a growth of around 25%. Now, this is outpacing the industry growth average of approximately 10% year over year. Clover began 2022 January already above its previously indicated 2022 average MA membership guidance of 82,000 lives. So, our continued industry-beating growth is a testament to the value consumers find in our approach of providing high-quality plans at a low cost on a wide open network, said Andrew Toy, which is the president of Clover Health. Now, we believe our dramatic growth in Georgia demonstrates how the model we honed in New Jersey is replicable, and more states look forward to further establishing Clover Health's MA presence in key markets this year. Clover experienced management or membership growth in a number of service areas, counties for 2022 across Georgia, New Jersey, Pennsylvania, South Carolina. Clover's MA plan are available to eligible individuals in 209 counties across the state. So they basically anticipate a continuous growth, and just basically they are just trying to mention that they've seen a good amount of growth for memberships year over year. Now, I did talk about their fundamentals and balance sheets last time and their last earnings, so you'll have to watch my last video if you want to get to know more about that. But currently on the price over book, they're seeing a 3.20, so it's currently a bit cheaper than the SP 500 average. And the price over sales is around 1.41, so it's around 1/3 of what the SP 500 is. So undervalued when it comes towards valuation. Now, coming in towards profitability, TTM, you're able to see that their average is around -40. So you got -43.72 operating margin, EBI TDM margin of -44, and net profit margin of around -39%. In terms of management effectiveness, you're able to see a return on assets of -45.47 and return on equity of -67.14 and return on investment capital of -52.41. So for growth rate, you're able to see earning per share, you're seeing a -1.033. Hopefully these numbers improve, but as you get to see, it doesn't look that good in terms of profitability and management, but it does look undervalued for valuation. Institutional buyers, you basically have one of the newest ones on SCH Sponsors, or 3 LLC, and you're able to see that the previous number of shares was around 41,000 shares, or sorry, 41 million shares, my bad, and now they have around 30.4 million shares. So that means they basically liquidated around 1/4 of their shares, around 26.55%, and that is basically following what you see in Grown Oaks Capital Partners on December, liquidating around half of their position, in Vanguard liquidating around half mid-2021. So you're able to see a bit of an exodus from the main institutional buyers, but still kind of going in sideways for just a general institution public with this company's interest. Insiders, you don't have much going on here, just normal exercising taxes, that kind of stuff. And SEC filing, we don't have anything new. Now, there are a bunch of people that are talking about this being a high short interest stock. Now, previously it was, but currently I don't actually see it in any of these top ones. Currently, the short interest as a percentage float is only seen to be around 9%. So it's not as significant as it once was, but in terms of retail, you're able to see the mentions of Clover isn't as significant as it once were. There is basically kind of a dead beat on it kind of vibe that I'm getting here. Now, before moving on towards technical analysis, if you would like to see more contents like this, make sure to click the subscribe button and leave notification buttons on for this channel, and don't forget to drop a like. And on to technical analysis. Now, from a technical analysis standpoint of view, what you're actually seeing here is a little bit of a catastrophe when it comes in towards moving averages. They're all kind of dropping downward, which is not a good thing. MACD is attempting a negative reversal, and that itself is not really a good thing. It's currently not really going in that direction as much. It's just on the zero level, because we do see on the last trading day, we got a bit of a green candle. It kind of slowed down the drop. So there is a little bit of cushion for it itself. Momentum here, you're able to see it's actually climbing up, even though it's negative. It's climbing up from the negative parts. And the willing percent R, which is very similar to the relative strength index, is escaping a little bit of the oversold section, moving on a bit to overbought, but currently it's not even outside oversold. It's just on the border around 80 on the willing percent R. RSI is similar, but might give you a little bit that it's outside the oversold part. Now, stochastic fast and stochastic slow, it's kind of showing most of them are going a bit downwards, suggesting a strong indication that this downtrend is not done yet. And the moving average bands are still going downwards. It still hasn't stabilized yet. Currently going between 405 and 332. The price point is around 311 currently. So below the moving average bands, but above the Bollinger bands at 290 and below 447. Now, charts. You can easily do the Fibonacci retracements from 2885, one of the highest moments it's been ever, actually the highest. And the bottom is right where it's at, 293. The last trading day gave you the bottom. Resistances are at 905, 1283, 1589, 1889, or 1895, and 2330. The support is at 293. Now, that's all right, but resistances, we have a few. So the only support really is at 293 and around 301. Resistances 314, 335, going up to 371, 396, going higher to 427, 466, 526, 586, and jumps a little bit higher to around 707. And you get to see they're on 814 and then 862, and it still gradually goes up to $10. Now, in terms of analyst recommendations, you're able to see that they're giving it a moderate sell. 8 days ago, Citigroup initiated a coverage for this one, hold position for 350, and before that, 11 days ago, Credit Suisse gave it a downgrade with a sell of 350. Currently, it has a moderate sell based on 2 analysts on 3 months rating, but nonetheless, even if you take a look at 7 months, they're all sells except the one received 8 days ago of a hold. This gives it a moderate sell. Now, if you consider everything, it's a strong sell. Nonetheless, the $350 price target is still around 13% where it is right now. Comes to the question to Ed, what do you think about this one? Well, at 354, it's more likely a better price point to buy than perhaps at $10, well duh, but coming in, do I think it's going to recover? Does it recover in the next year to 88, 85? Unless it's some pump and dump, I really don't think so. Unless it's kind of like a short squeeze situation that is fueled by retail. But I think that it has a chance to go back to $10 if the management actually goes on in the right path and moves on in the right direction, rather than kind of giving you, well, yes, we grew with the the MAs, the memberships, but really, we are still struggling because of this and that. Well, if you are struggling, you're supposed to be a software company. If you're a technology company that you're actually suiting yourself that way and you're resilient to market changes, you need to show it. Hopefully, that is the case. What do you think about this sticker? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day. Now, if you're still here on this video, make sure to drop down below and join our Discord. We have a lot of different things going on, including, for instance, members that gives picks for free. It's not pump and dumps, we just things we think about, swings, etc. We also have really exciting bots. You can actually use those ones. For instance, we're just testing out this bot, for instance, that gives you Fibonacci resistance points, activities, etc. And we have a bunch of free things, totally free. We run on tips here, and you can ask me questions, suggest stocks, etc. It's a really nice community that has been growing up very fast at a very good rate, and it's totally free. If you would like to join that one, feel free to do so in the description below, and have a wonderful day.